Good day, everyone. Welcome to the weekly note of GTC Traders. This is a feature we do each week, as you can tell if you click on the little category for the GTC weekly note. This is something that we do each week. If you are new, I am the senior partner of a separate private proprietary firm, and we decided, hey, how about we put our weekly note up? We're not by any means the only one that does a weekly note. This is something that's very common among many firms, weekly note or a daily note. And we thought, hey, how about we just make this real easy on ourselves? How about we just copy and paste sort of our weekly note from our private proprietary firm and put it over here on GTC Traders? So that is what we do. And the article itself has all of the vagaries, usually, of different thoughts as far as the economic calendar for that week and what we see in interest rates and various markets. If you're sort of curious about a weekly note, if you go to the GTC Traders YouTube page and you look at something like the playlists, so you click over at the playlists, come down here, go to the GTC weekly and daily note playlist, look at the full playlist. The first three, maybe even the first four videos really describe why so many firms do this. Okay, so why so many firms have a weekly and a daily note, really what is the value of a weekly and daily note, what it is and what it is not. So that's just for folks who are new. And then, as I will now, I usually yabber on about the vagaries of each week. So on to the vagaries for this week, November the 27th, 2023. There's just a couple of things I'd like to highlight. I've said a few times that I'm sort of waiting for more data to come in, and that takes time on the inflation picture. And I have seen some encouraging signs as far as inflation lessening. So inflation coming down, obviously it's come down. That's not the question. That's already happened. The question is, will it stay down, or do we repeat a 1977 to 1981? And I think that's what the Fed is concerned about, and I think intelligently so. I want to highlight something that Discovery Trading Group has been talking about quite a bit. This is just one tweet that they put out, but it has to do with OIS and the swap curves, and the picture that the swap curves are sort of painting. As this particular tweet, this is back on November 23rd, points out, it is synthetic LIBOR because of, all of that mess, which I'm not going to get into now, which I have many definite thoughts on. And I also don't want to tick off the powers that be. Oh, I love what you've done. Everything that you've done with all of these instruments is fantastic. And I am so glad that the powers that be have switched over to all of these what do we call them? Average transactional, non-risks, secured rates that control everything the 9 months out. I think that's just brilliant. So I don't want to tick them off, and I'm not going to go near that. Regardless, it is synthetic LIBOR pegged. However, it does paint you can go, and I would encourage you to go to Discovery Trading Group's Twitter feed and look through these posts that have to do with, and he gets into some depth as far as describing how to look at these swap curves, the markets, how they're cleared. There's a lot of information there. But what I would highlight is here, right? What we got on the spread going out a few months into the future is still within that 5.5 range, right? 550 basis points, 542 basis points, 526 basis points. So it's still in that range, 5 months out. So I would highlight that. Although I am encouraged by some things I've seen on the inflation front, as has pointed out here, the swap curves are sort of indicating a sticky for longer picture. The other thing I would point to is just price action. So when we look at something like TLT here, or the longer end of the bond curve, we've very obviously had a rally in price or lower yields. So higher prices, lower yields. The question is this a relief rally, or is this the beginning of a new trend? And that's the current debate, and that gets settled in the market. I'm not going to tell you what's going to happen because I don't know. I will say that when you look at the weekly note itself and you see our stance, remember a lot of that is led by price action. However, I think it behooves every established trader to think in a very systematic, and I do think in a very systematic, process-driven way. Some of my friends, some of my business partners will tell you it is almost insane how systematic I am and process-driven. However, there has to be some discretion that you build. So I'm still neutral, honestly. I do not see a change in trend. I see a relief rally. So which is correct? Is this a relief rally that we've gotten? Or is it, in other words, yeah, we've just gotten a bounce and that's all the bounce is and sell it off? Or is this the beginning of a move to lower rates? And my stance is, as far as that question long term, nobody knows. Anybody that says they have the definite answer is a fool, or they're lying, or both. So I don't know. I have to make a call, though, because as we're going to get into here, and as I'm creating this series on GTC traders, trading does apply the same mathematics as gambling. And eventually, if you're holding pocket rockets and the flop hasn't gone your way, are you going to stick with it? And what's everybody else at the table handing? You just got to make a call, right? You just got to make a call. So there's an aspect of discretion. Now, my call at the moment is we are still neutral. I don't know. And as I am neutral, I'm willing to sell. I'm actually a little more willing to sort of look at bearish plays, maybe sell premium, things like that here, than I would be to buy, simply because we've had a rally in the last 7 days. And I'm very much a contrarian. When I see a rally that's gone on for, 27 days, actually even longer than, 35 days, I'm just looking to sell it because that's what I like to do. However, it's a discretionary call. And I think, although I'm firm believer in processes and sort of it is a gray box approach. So there is an aspect of discretion. I'm more interested in seeing this as somewhat of a relief rally, although I am neutral, right? I am more than willing to also look at longer plays. Shallow pullbacks is paid in the last month here. So I look at both sides. I look at, being a bear and being a bull. I'm not committed one way or the other. So I just wanted to say that, especially when you look at the longer end of the bond curve, just there is an aspect of discretion that has to play a part, aside from processes that anyone may have. And no, it doesn't matter how well they've worked in the past. There's just always an aspect of discretion. Okay, so that's just sort of the couple of points that I wanted to make this week. And that has been what it's always been. This has simply been our thoughts. Sort of the video for the weekly note always contains the vagaries of our thoughts. And that's all they are. They're our thoughts, and they are only good until they are canceled. And they have been only our thoughts, not yours, for whatever the heck day it is. As always, stay safe, trade well, and remember that love doesn't cost to die.